Standard 59, when it was introduced, it was really challenging. And it continued to be challenging for some segments of the market, and Malaysia was one of these markets. Because the requirements of having tangible assets was a bit of a challenge to qualify. There is other angles, but I'm trying to simplify it. So Standard 59 is, among other things, is having tangibility. It's adding an additional credit risk layer where the sukuk can be triggered, i.e. you will request the sukuk to be paid if you are not complying with the Sharia requirement. But it did not change the actual credit profile of a sukuk from being a senior unsecured, i.e. a debt that relies ultimately about the ability of the issuer, whether it is a government or a bank or a sovereign, to fulfill the debt, to something else. So that was challenging. The market, the big issuers of the markets, the sovereigns, the banks, and the big corporation have passed that and went through the transition. If they chose to, because not all markets chose to do that. Like, for example, Saudi Arabia as a sovereign did not comply with Sharia AAOIFI 59. Now, Standard 62, the one that is in draft format, if it's really translated to what it is implying to, it's going to change the credit profile for the instrument from being a senior unsecured to an asset-backed securitization. That is, by its nature, is not something that you would say, okay, I'll just put the underlying asset and move. That is an actual transformation of a debt class from one debt class to another. That could be easy to say if that debt class exists in market where sukuk is active. So the securitization and the asset-backed bonds, and I'm not talking sukuk, is almost non-existence of most of the markets of the OIC countries where you have that, i.e. you rely on the project or the assets to pay your debt rather than the issuer. So it doesn't exist. So that is a big challenge. Now the format is still in a draft format, just to put things in perspective. For me, I'm looking at it on 3 stages. Stage 1 is to see the final draft. How is that going to look like? Is it going to continue the same thing? Will it really be that? Secondly, who is going to implement it? Because AAOIFI is not implemented by default. It is implemented by choice, i.e. someone will say, okay, I'm going to go and implement AAOIFI. There is 20 jurisdictions that comply with AAOIFI Sharia standards. So that's stage 2. But stage 3 is how are they going to implement it? Because these 20 jurisdictions currently vary significantly on the way that they implement AAOIFI 59 and the other standards. The Sharia standards is not implemented in the same way. So it's a 3-stage approach. We are monitoring it. We're seeing how is it going to impact. We rate currently around 190 billion of outstanding sukuk, which is a significant part of the market. It's more than 212 or 15 instruments globally, so it's a significant part of the market. The vast majority of these, with the exception of IILM, is what we call asset-based. IILM is asset-backed, but that is rare. So it's a transformation that I would say if what we saw in 59 was a challenge, this is a transformational shock, I would say. So we're watching that, we're seeing how it's going to impact the market, who is it going to impact, how long is it going to last, but it's not the first time that the industry has seen turbulence. So that's a quick summary.